Alright, so the market is not resting. We see the main American stock market indices exploding today, again, on the verge of breaking their records. But look at this chart. Isn't it too stretched after this week's rally over here? So you may ask, will we have the strength, the momentum to keep going up from here? Well, let's talk about it. If you don't know me, my name is Nathan. I'm a Brazilian trader sharing my market readings here on this channel. And here, guys, here on this channel, you will not see guesswork, assumptions, or gut feelings, right? Everything we talk about here is based on technical analysis, statistics, and facts. Here we read charts without bias, without spreading panic or euphoria, just technical evidence. Welcome or welcome back to the Finance Hydra channel. Now, as we can see here, SPY is making another very important bullish reaction. We are breaking yesterday's high. We are maintaining the bullish bias. We are still trading above the 21-day EMA, the exponential moving average. When we take a look at the 1-hour chart, for instance, we see an rally over here after closing this gap around $541, which did act as a very nice support level for SPY's price. Since then, we don't see any meaningful pullback over here on the 1-hour chart. Therefore, I'm gonna tell you guys, if we see a short-term pullback to the 21-hour EMA again, let's not be surprised, because that would be a totally normal and okay movement for the SPY. This is not gonna ruin, this is not gonna frustrate the bullish bias seen on the 1-hour or on the daily chart over here. But I do agree that if SPY goes up to the point of reaching the all-time high area, and if it makes a crystal clear top signal, a crystal clear bearish reaction below this key point, then we will have some problems, all right? Then we may see a sharper correction ahead, possibly to the 21-day EMA on the daily chart over here. 21-day EMA on the daily chart. Of course, this is obvious, right? The 21 EMA on the daily chart, all right? Which is our next technical support on the daily chart. What's the next technical support below this moving average? $551. Of course, we can also work with a few Fibonacci's retracements over here, but as we can see, the 21-day EMA, the $551 and the 50% Fibonacci's retracement over here, they're all around the same price level. Therefore, this entire area over here could be a very important inflection point for the SPY if we see a pullback ahead. Is there any top signal right now? No. Is there any bearish reaction suggesting that SPY could trigger a pullback on the 1-hour chart, for instance? Not yet. We are still insanely bullish. We are still maintaining the bullish bias on the short and medium term, and there is not a single meaningful bearish reaction on the weekly chart as well, which, by the way, is insanely bullish. We are respecting the 21-week EMA as a very important support level, and this week apparently we are bouncing off this indicator as well. Similarly, we see the QQQ also making another very good bullish movement, breaking yesterday's high, maintaining the bullish bias on the 1-hour chart. Yes, this chart looks too stretched, right? It looks a little bit overbought, but on the daily chart, we are not overbought yet. Let's take a look at a few indicators over here. When we take a look at SPY, for instance, SPY's RSI is just okay. We are below the 60%. It's totally fine. The QQQ is also totally fine, all right? We are also below the 60%. What's more, this is quite interesting because the SPY shows no divergence, no meaningful divergence over here, all right? It seems the situation is totally under control, but the QQQ shows an advanced breakout of the previous top level on the OBV. This indicator over here is the OBV on balance volume. And as we can see here, SPY's price is breaking the previous top level, which was around this key point over here on August this year. However, the price isn't. When we see this going on, we called advanced breakout because the indicator is showing a potential breakout of the previous top level before the price. Therefore, we gotta pay extra attention on the QQQ because tech stocks could perform very, very well in the next few weeks. Potentially the QQQ could seek the all-time high next. All right, we already see an advanced breakout on the daily chart on the OBV. We see it is not oversold on the RSI. We are still maintaining the bullish bias. We don't see any top signal, so it is very important for us to keep our eyes open around this area over here. So far, the situation looks very good. But Nathan, what if we see a top signal? What if we see a crystal clear bearish reaction? Then okay, QQQ, SPY, they're all gonna correct. We're gonna see our stocks correcting as well. Maybe this is gonna ruin the bullish thesis, maybe not. We don't know. We don't need to know in order to trade well. Remember, trading is reactive. It is not predictive. What's more, the QQQ is still inside this ascending channel on the weekly chart. Just like the SPY, we are making a very strong bullish reaction on the weekly chart over here. They are both materializing the same pattern. This candlestick pattern has a name. It's called above the stomach candlestick pattern, which let me show to you guys. According to Bukowski's studies, it is a quite reliable bullish reversal pattern. In theory, it acts as a bullish reversal. Its tested performance is of bullish reversal 66% of the time. Of course, the above numbers are based on hundreds of perfect trades. For more information, just take a look at the patternsite.com. I recommend reading Thomas Bukowski's books, all right, because they are very, very good. Now, as we can see here, back on the SPY, back on the QQQ, above the stomach pattern, bullish reversal 66% of the time. Therefore, odds are that the indices will keep performing very well. We don't know the future, but from a statistical point of view, this is the most likely scenario, all right? And how this is going to affect our stocks? Well, Nvidia also shows an above the stomach candlestick pattern over here, above the 21-week EMA. Okay, very good. When we take a look at the daily chart over here, Nvidia is breaking the 21-day EMA. It's maintaining the price above this key point. Very good. However, today, Nvidia failed in breaking yesterday's high. It is showing some weakness over here, and this could translate into a sharper correction on the 1-hour chart. What's the problem? The problem is that we don't see any meaningful bearish reversal chart structure materialized over here yet. In fact, what we see is a sideways correction, all right? There are two types of corrections: sideways corrections and price corrections. A sideways correction occurs when we see the price moving sideways, and then indicators like the 21 EMA over here is going to catch up with the price instead of the price actually dropping to meet the 21 moving average, all right? So this is a classic sideways correction. It is moving sideways. We don't see any bearish reversal structure materialized yet. However, we are showing some weakness on the daily chart by not breaking yesterday's high. Still, this is not, I'm not saying Nvidia will collapse, will crash. No, I'm saying that right now, Nvidia's price is stabilizing. We don't see a top signal. We don't see any meaningful reversal signal over here yet. Therefore, odds are that the bullish bias will persist. If we see a correction, great. We could see any correction back to one of the Fibonacci's retracements over here. And I do believe this is not gonna actually ruin the bullish thesis on Nvidia. In theory, right now, since this one has been breaking consistently all of our main resistance levels, its next technical target is around $131. We see many very good movements over here on Nvidia. For instance, guys, there is an inverse head and shoulders chart pattern on the 1 hour chart. A crystal clear inverse head and shoulders, which is one of the best, statistically speaking, one of the most reliable bullish reversal chart structures ever. A head and shoulders has a throwback rate, meaning we could drop all the way down to meet the neckline again, the neckline which is around this. Let me turn this line blue, all right? Around this blue line, around 109 over here, 66% of the time. We could easily see a pullback to this line over here, and that's not gonna frustrate the bullish bias on Nvidia. And of course that I teach you guys how to trade an inverse head and shoulders correctly on our ebook over here. I showed you guys how to trade, how to identify, how to trade correctly, all right, how to use the key points in your favor. And if you do want to learn how to identify these patterns over here, mention it on this channel, then just download our ebook on technical analysis. It is totally free. Anyone can try our service for free and download our ebook, which will be yours forever. We offer you all the technical teachings you need to improve your skills. This head and shoulders over here, for example, we traded together, all right? The strategy was delivered in detail to our members. I told you guys, we don't just teach you and that's it, all right? Go trade all by yourself. No. Here we teach you in practice, in real time, trading together. Here we are skin in the game. So just check out our website for more information, download our free ebook, and join our community. Link in the video's description. All right. Now, yes, we did nail this inverse head and shoulders. Very good. NVIDIA is breaking all of our targets. Our next technical target is 131. So far, there is nothing suggesting that Nvidia won't get there, but it is important to keep your eyes open because SPY is approaching the all-time high. So it is not gonna be a surprise if we see SPY correcting from here, bringing Nvidia, Tesla, and other stocks along with it. All right. Now, Tesla. Speaking of Tesla, it is this one. Just look at this, all right? We have been talking about the $233 for a while. This key point was a previous support level, previous resistance level 1, 2, 3, 4, 5 times over here. Right now, it is acting as a resistance level again. Tesla failed in breaking this key point today. It could break it tomorrow. Tomorrow is Saturday. Next week, all right? It could break it, but it is annoying to see its price struggling below this key point. I do agree with you, but it is still maintaining the bullish bias. We are still above the 21-hour EMA. We are still above the 21-day EMA. We are still respecting our support levels. There is still the idea of an ascending triangle chart pattern over here, all right? What could totally frustrate this bullish thesis on Tesla, Nathan, if we lose this double support area made by the 21-day EMA and made by this purple trend line, which connects all the previous support levels since August 5 over here, all right? Only by losing these two key points, Tesla will completely ruin the bullish thesis. And in this scenario, we could seek the next support level, 182. Therefore, we gotta pay extra attention on this key point. AMD is also performing very well. It is breaking yesterday's high. It is maintaining the price above all of our support levels. It broke all of our key Fibonacci's retracements over here. We also nailed this bullish Harami together on our group, all right? This one was a crystal clear buy signal above the 61.8%, but right now we are stabilizing our price over here. And if we see a pullback now, if we see a pullback to the 21-day EMA, in my humble opinion, AMD could give us another buy signal because we're gonna buy near a support level while the trend is bullish. Therefore, AMD could offer us a very good buying opportunity in the next few days. But so far, there's not a single top signal on AMD. We are still maintaining the bias on the 1 hour chart, on the daily chart, and when we look at the weekly chart, we see another massive above the stomach candlestick pattern, which could become a possible bullish pivot point. By breaking the previous top level, AMD is gonna trigger a long-term bullish reversal, and in this scenario, we could seek the all-time high again. If that's too optimistic, I don't know. I don't need to know in order to trade well, all right? Remember, trading is reactive, not predictive. Meanwhile, we see Palantir losing momentum over here in the end of the day, but it is still maintaining the bullish bias. This alone is not a top signal. We are still above the 21-hour EMA. We are still making a bullish candlestick pattern on the daily chart. Now, but Nathan, it's too stretched, right? What if we see a pullback? If we see a pullback to the $33 or maybe even to the 21-day EMA, if we see any pullback to this area, if you ask me, Palantir could be another buy because we're gonna buy near a support level. Guys, remember, buy near support levels. Do not buy near resistance levels. Do not buy after an insane bullish rally already materialized because you are gonna buy from the smart money who's selling to you because the smart money bought down here, all right? You are gonna buy from these guys. No, buy near support levels. The risk reward ratio is better. You are gonna optimize your trading strategy by doing this. Therefore, if Palantir triggers a pullback, fantastic. It's gonna be probably another buy if we see a bullish reaction around its support levels. All right, and super microcomputer is bouncing nicely. This one has two major resistance levels to face it before turning bullish, all right? The 21-day EMA and the $513 over here. These two key points, they are gonna be very problematic for super microcomputer, but by breaking these key points, if you ask me, in my humble opinion, super microcomputer is gonna bounce on the weekly chart, potentially retesting the 21-week EMA. That's a lot of upside potential. Therefore, let's see how this one is gonna behave around this dual resistance level. Meanwhile, we see ARM Holdings breaking the previous resistance level 138, leaving this key point behind. Now, what to expect next? If we see a pullback, there is not a single top signal yet, all right? There is not a single bearish reaction, but if we see a pullback, the 138 is going to act as a support level for us next. According to the principle of polarity, previous top levels act as future support levels. We saw that multiple times over here together. Therefore, this is going to be a technical support level. Nathan, what if ARM Holdings lose this key point? The 21-day EMA is going to be our next technical support level. All right, what if it keeps going up? Our next technical target is 173. This is it, period. The situation is very simple over here. Now, Broadcom. This one is exploding. This one is heading towards our next technical resistance level, 172. We saw a fantastic hammer candlestick pattern right above this purple trend line, which connects all the previous bottom levels since October 2023, almost 1 year ago. Therefore, Broadcom is maintaining the long-term bullish bias. We just approached a critical support level, and right now we are bouncing strongly. On the weekly chart, we see another above the stomach candlestick pattern. Nathan, I'm a long-term trader, right? I like holding my positions for months or even years. In this case, well, this is a technical, this is a classic technical bullish signal for you, all right? In this scenario, Broadcom could easily seek the all-time high or even break the all-time high in the next few weeks because it is a quite reliable, interesting bullish reaction above a critical support level. The risk-reward ratio right now is not that good if you ask me. If it does a pullback, it's gonna be better, but right now, it is not that good. And I'm so sorry, guys. I'm still a little bit sick, all right? Which, by the way, reminds me, if you are not a subscriber yet, consider subscribing because, well, because you have been watching this video for more than 20 minutes right now. Well, 20 minutes, dude, it's too late for you, all right? I simply got you over here. Therefore, consider subscribing. In my humble opinion, you already have my respect, all right? Because watching a video for 20 minutes nowadays with TikTok, Instagram Reels, right? YouTube Shorts, short videos, which simply turn people into zombies watching their smartphones, destroying our ability to maintain focus in one single task for more than 60 seconds. Watching a video about the stock market, charts, right? Technical analysis for more than 20 minutes. Bro, you are a hero and you don't know it. Therefore, subscribe this channel. Click the like button to support me as well, alright? And now, Micron technology is making a very nice, interesting bullish reaction. It is extremely erratic, alright, around this support level. But if you ask me, by materializing a bottom signal over here, on the weekly chart we see a hammer candlestick pattern, which is at the same time a bullish harami candlestick pattern over here. I describe all these patterns on my ebook. It is free. Just take a look at my website. These patterns over here suggest that Micron could recover from here. Micron could bounce to higher levels. Its next technical resistance level, if we break the 21-day EMA, is this red line over here, $111. What's the problem? It is going to report earnings in 12 days. So this one needs to react as soon as possible in order to materialize a real, meaningful, bullish reaction in the next few days. And I'm going to be here keeping you guys updated on this market. Therefore, again, subscribe, click the like button, take a look at my website, and join a community of consistently profitable traders. Thank you for your audience, my dear friends. See you guys next Monday. Stay safe. Bye-bye.